Question 1. When an internal auditor is assessing the effectiveness of the resource requirements analysis within a business impact analysis, BIA, conducted according to ISO 22317-2015, what is the primary focus of their evaluation regarding the identified dependencies between critical business functions and their supporting resources? Option A. Checking if the analysis includes a detailed historical record of all resource failures that have occurred in the past 5 years, without direct linkage to current business function criticality. Option B. Ensuring that the analysis quantifies the exact monetary cost associated with the loss of each specific resource, regardless of its impact on business functions. Option C. Confirming that the analysis prioritizes resource restoration based on the alphabetical order of the business functions they support to ensure fairness. Option D. Verifying that the analysis explicitly maps the impact of resource unavailability on each critical business function, detailing the consequences of exceeding defined recovery time objectives and recovery point objectives for each resource type. The correct answer is D. Verifying that the analysis explicitly maps the impact of resource unavailability on each critical business function, detailing the consequences of exceeding defined recovery time objectives and recovery point objectives for each resource type. Explanation: the process of evaluating resource requirements analysis within a business impact analysis (BIA) framework, as guided by ISO 22317-2015, involves scrutinizing the identification and quantification of resources essential for critical business functions. An internal auditor's role is to verify that this analysis is comprehensive, accurate, and directly supports the development of effective business continuity strategies. This includes assessing whether the BIA has adequately considered all categories of resources, such as personnel, technology, hardware, software, networks, facilities, critical supplies, and third-party dependencies. The auditor must confirm that the analysis clearly defines the minimum acceptable levels for each resource to maintain critical functions within their defined recovery time objectives, RTO, and recovery point objectives, RPO. Furthermore, the evaluation should ascertain if the BIA has identified any interdependencies between different resource types and business processes, and how the failure of one resource might cascade to impact others. A key aspect is ensuring that the analysis differentiates between essential resources required for immediate recovery and those that can be restored later, aligning with the prioritized recovery of business activities. The auditor also looks for evidence that the resource requirements are realistic and achievable within the established recovery timeframes, considering potential constraints and limitations. This thorough review helps ensure that the BIA provides a solid foundation for selecting appropriate and feasible recovery options, and for allocating necessary resources to support the organization's resilience. Question 2. During an internal audit of a financial services firm's business impact analysis, BIA, conducted according to ISO 22317-2015, an auditor is reviewing the documentation for the client onboarding critical business function. The BIA identifies that this function relies on the Customer Relationship Management (CRM) system for client data and the digital signature platform for contract finalization. However, it fails to explicitly state that the digital signature platform requires a stable internet connection provided by a specific telecommunications vendor, and that the CRM system's data integrity is contingent on daily batch processing from a legacy client data repository. Which aspect of the BIA's review is the auditor most critically assessing in relation to identifying dependencies and interdependencies? Option A. The alignment of the BIA findings with the organization's overall risk appetite statement. Option B. The thoroughness of identifying upstream and downstream linkages for all critical business functions and their supporting resources. Option C. The accuracy of the maximum tolerable period of disruption, MTPD, assigned to the client onboarding function. Option D. The completeness of the resource inventory supporting the client onboarding function, including all hardware components. The correct answer is B. The thoroughness of identifying upstream and downstream linkages for all critical business functions and their supporting resources. Explanation: the core of a business impact analysis, BIA, is to understand how disruptions affect an organization's ability to perform its critical activities. ISO 22317-2015 2015 emphasizes identifying dependencies, which are the reliance of one activity, resource, or system on another. Interdependencies are a more complex form of dependency where multiple elements rely on each other in a reciprocal or circular fashion. An internal auditor's role in reviewing a BIA is to ensure that these relationships are accurately identified and documented, as they directly influence the determination of recovery time objectives, RTO, and recovery point objectives, RPO. Without a thorough understanding of these connections, the BIA's output might be incomplete or inaccurate, leading to ineffective business continuity plans. For instance, if a critical customer service function relies on a specific IT system, and that its system relies on a particular data feed from an external vendor, failing to document the data feed dependency would mean the BIA might underestimate the impact of a vendor outage on customer service. The auditor must verify that the BIA process systematically uncovers these upstream and downstream linkages across different business units, technological systems, and third-party providers. This ensures that the full cascading effect of a disruption is understood, enabling the organization to prioritize resources and develop robust recovery strategies that address the root causes and interconnected impacts of potential disruptions, thereby supporting compliance with regulatory requirements for operational resilience. Question 3. When initiating the planning and preparation for a business impact analysis, BIA, in accordance with ISO 22317-2015, what fundamental preparatory action is paramount for ensuring the subsequent data collection and analysis are relevant and actionable, particularly when considering the diverse operational units within a global conglomerate like Omnicorp Global? Option A. Establishing a detailed stakeholder engagement matrix that maps out individuals and groups with critical knowledge of Omnicorp's interdependencies and impact tolerance levels across all business units. Option B. Developing a comprehensive list of all potential threats and vulnerabilities that could affect Omnicorp's operations, irrespective of their likelihood or potential impact magnitude. Option C. Conducting an exhaustive review of all historical incident reports from the past decade to identify recurring operational disruptions and their reported impacts. Option D. Procuring specialized BIA software licenses for each of Omnicorp's regional subsidiaries to ensure standardized data input and reporting capabilities. The correct answer is A. Establishing a detailed stakeholder engagement matrix that maps out individuals and groups with critical knowledge of Omnicorp's interdependencies and impact tolerance levels across all business units. Explanation: the planning and preparation phase for a business impact analysis, BIA, under ISO 22317-2015, requires a systematic approach to ensure the analysis is comprehensive, accurate, and aligned with organizational objectives. A critical element of this preparation is the identification and engagement of key stakeholders. These individuals possess the necessary knowledge of business processes, dependencies, and potential impacts. Their active participation is vital for gathering reliable data and validating findings. The scope definition is another foundational step, determining which business units, processes, and functions will be included in the BIA. This requires an understanding of the organization's structure, critical operations, and strategic priorities. Without a clearly defined scope, the BIA risks becoming either too broad to be manageable or too narrow to capture significant interdependencies. Furthermore, establishing clear objectives for the BIA ensures that the analysis is focused on achieving specific outcomes, such as identifying maximum tolerable downtime or critical resource requirements. The selection of appropriate BIA methodologies and tools is also a crucial planning consideration, ensuring that the chosen methods are suitable for the organization's context and the nature of the processes being analyzed. Regulatory requirements, such as those mandated by data privacy laws or industry-specific compliance frameworks, must be considered during the planning phase to ensure the BIA addresses all relevant legal and contractual obligations. Question 4. During an internal audit of a business impact analysis conducted in accordance with ISO 22317-2015, an auditor is reviewing the documentation for the customer order fulfillment critical business function. The BIA report notes that this function requires a minimum of 5 trained customer service representatives, access to the enterprise resource planning (ERP) system, and a stable internet connection. However, it does not specify the acceptable downtime for the ERP system or the minimum bandwidth required for the internet connection. Which of the following represents the most significant deficiency in the identified resources for this critical business function from an internal auditor's perspective? Option A. Failure to identify backup personnel for the customer service representatives. Option B. Incomplete assessment of the financial impact of a disruption to customer order fulfillment. Option C. Lack of defined acceptable downtime for the ERP system and specific minimum bandwidth requirements for internet connectivity. Option D. Omission of the specific software modules within the ERP system that are critical for order fulfillment. Correct answer is C. Lack of defined acceptable downtime for the ERP system and specific minimum bandwidth requirements for internet connectivity. Explanation. The core of a business impact analysis, BIA, is to identify and quantify the impacts of disruptions on business activities. ISO 22317-2015 emphasizes that the BIA process should identify resources essential for the continued operation of critical business functions. This involves understanding not just the immediate needs, but also the dependencies and potential cascading effects of resource unavailability. For an internal auditor reviewing a BIA, the key is to verify that the identified critical business functions have clearly defined resource requirements, including personnel with specific skills, technology infrastructure, physical facilities, and external dependencies like suppliers or regulatory bodies. The auditor must ensure that the BIA process has systematically captured these requirements, and that the impact assessment accurately reflects the consequences of their unavailability within defined timeframes. For instance, if a critical function like customer order processing is identified, the BIA should detail the necessary IT systems, the number of skilled personnel required to operate them, the physical location of these systems, and any critical third-party software or data feeds. The auditor's role is to validate that this comprehensive resource mapping has been performed, and that the subsequent recovery strategies are directly informed by these identified needs. The focus is on the thoroughness and accuracy of the resource identification as a foundation for effective business continuity planning. Question 5. When auditing the documentation of critical business functions as part of a business impact analysis, an internal auditor must verify that the records accurately reflect the function's operational interdependencies, resource requirements, and the maximum tolerable period of disruption. Considering the principles outlined in ISO 22317-2015, which of the following documented elements would an auditor find most crucial for validating the completeness and accuracy of the business impact analysis process for a customer-facing order fulfillment system? Option A. Detailed logs of all historical system outages and their resolution times, cross-referenced with customer complaint data. Option B. A clear statement of the function's purpose, its criticality rating, dependencies on upstream and downstream processes, and the defined recovery time objective. Option C. An inventory of all hardware and software assets utilized by the order fulfillment system, along with their warranty expiration dates. Option D. A comprehensive list of all personnel assigned to the order fulfillment department, including their contact information and vacation schedules. The correct answer is A. Detailed logs of all historical system outages and their resolution times, cross-referenced with customer complaint data. Explanation. The internal auditor's role in documenting critical business functions, as per ISO 22317-2015, is to verify that the organization has identified and described these functions in a manner that supports the business impact analysis, BIA. This documentation should clearly articulate the function's purpose, its criticality, dependencies, both internal and external, required resources, personnel, systems, facilities, and acceptable downtime. A key aspect of this verification is ensuring that the documented information is sufficient to enable the subsequent analysis of impacts over time. For example, if a critical function is the processing of customer orders, the documentation should detail the timeframes within which order fulfillment must resume to avoid unacceptable consequences, such as significant financial loss or reputational damage. The auditor must confirm that the BIA process has captured the maximum tolerable period of disruption, MTPD, for each critical function and the recovery time objective, RTO. This involves reviewing the BIA reports, interviews with business unit managers, and supporting documentation to ensure completeness and accuracy. The auditor also assesses whether the documented critical functions are aligned with the organization's overall strategic objectives and risk appetite. Furthermore, the auditor checks if the documentation includes information on the interdependencies between critical functions, as a failure in one function can cascade and impact others. The process of documenting critical business functions is iterative and requires input from various stakeholders. The auditor's validation ensures that this foundation for the BIA is robust and reliable, enabling effective identification of business vulnerabilities and the development of appropriate recovery strategies. The auditor's work is not to perform the BIA itself, but to audit the process and its outputs, including the quality of the documentation that underpins the BIA. Question 6. During an internal audit of a business impact analysis conducted by a mid-sized financial services firm, an auditor is reviewing the documentation for the customer account management process. The BIA indicates that a disruption to this process could lead to a loss of customer trust, potential regulatory fines under relevant financial sector regulations, e.g., GDPR for data privacy, specific national banking acts regarding operational resilience, and a significant decline in revenue if transactions cannot be processed. The analysis quantifies that for every hour of downtime beyond 8 hours, the firm incurs an additional $50,000 in direct financial loss and a $1.5% increase in customer attrition. Furthermore, it's determined that losing customer transaction data older than 2 hours would necessitate manual reconciliation, causing substantial operational delays and increasing the risk of errors. Based on this information, what are the most appropriate initial recovery time objective RTO and recovery point objective RPO for this customer account management process? Option A, RTO 8 hours, RPO 2 hours. Option B, RTO 12 hours, RPO 3 hours. Option C, RTO 6 hours, RPO 1 hour. Option D, RTO 10 hours, RPO 4 hours. Correct answer is A, RTO 8 hours, RPO 2 hours. Explanation: the fundamental principle in setting recovery time objectives RTO and recovery point objectives RPO during a business impact analysis, BIA, is to align them with the criticality of business processes and the tolerance for data loss and downtime. ISO 22317-2015 emphasizes that RTO and RPO are derived from the impact analysis findings. Specifically, the maximum tolerable downtime for a critical process directly informs the RTO, representing the latest acceptable time for a business function to resume operations. Similarly, the maximum tolerable data loss for a process, often expressed in terms of the age of data that can be lost without causing unacceptable disruption, determines the RPO. For a process like customer order processing, the impact of prolonged downtime might include significant financial losses, reputational damage, and regulatory noncompliance. If a company cannot afford to lose more than 1 hour of order data and must resume processing within 4 hours of an incident, these translate directly into an RPO of 1 hour and an RTO of 4 hours for that specific process. The internal auditor's role is to verify that these objectives are established based on documented impact assessments and are realistic given the organization's capabilities and resource constraints, ensuring they support the overall business continuity strategy. The auditor would examine the BIA documentation to confirm that the RTO and RPO for each critical process are explicitly stated and justified by the identified impacts of disruption. Question 7. During an internal audit of a business impact analysis process, an auditor observes a workshop session where participants are deliberating on the criticality of various organizational activities. A key objective of the auditor is to confirm that the workshop effectively differentiates between core business functions and their enabling support services. Which of the following observations by the auditor would indicate a potential deviation from best practices for BIA workshop facilitation as outlined in ISO 22317-2015, specifically concerning the accurate identification and prioritization of critical activities? Option A. The workshop facilitator is prioritizing discussion on the impact of disruptions to administrative functions, such as human resources and IT help desk, before addressing the operational processes that generate revenue. Option B. The BIA team is utilizing a structured methodology to quantify the maximum tolerable downtime for each identified business function based on its impact. Option C. Participants are actively mapping the interdependencies between different business units and identifying potential single points of failure within critical processes. Option D. Workshop participants are assigning the highest criticality levels to functions that directly produce the organization's core product or service, and clearly delineating the dependencies of these functions on supporting departments. The correct answer is D. Workshop participants are assigning the highest criticality levels to functions that directly produce the organization's core product or service, and clearly delineating the dependencies of these functions on supporting departments. Explanation: the internal auditor's role in a business impact analysis, BIA workshop, as guided by ISO 22317/2015, is to ensure the process is conducted effectively and produces reliable data for the organization's resilience planning. When observing a BIA workshop focused on identifying critical business functions and their dependencies, the auditor must assess whether the participants are correctly distinguishing between primary business activities and supporting functions. Primary activities are those that directly deliver value to customers or stakeholders and are essential for the organization's survival. Supporting functions, while important, enable the primary activities to occur, but are not the core output of the organization. For instance, in a manufacturing company, the assembly line operation is a primary activity, whereas payroll processing is a supporting function. A common pitfall is to overemphasize the impact of disruptions to supporting functions without adequately prioritizing the core operational processes. The auditor's objective is to verify that the workshop outputs reflect a clear hierarchy of criticality, with primary functions identified as having the most severe impacts if disrupted, leading to appropriate resource allocation for their recovery. This ensures the BIA accurately informs the development of business continuity strategies that focus on the most vital elements of the organization's operations. Question 8. During an internal audit of a financial services firm's business impact analysis process, an auditor noted that the analysis primarily focused on quantifiable financial losses like lost revenue and increased operational costs. However, the disruption scenario involved a prolonged outage of the firm's online client portal, which is crucial for account management and communication. Considering the principles of ISO 22317/2015, what critical aspect of impact assessment might be insufficiently addressed in this scenario, potentially leading to an incomplete understanding of the business disruption's consequences? Option A. The assessment of non-financial impacts such as reputational damage and loss of customer trust due to service unavailability. Option B. The identification of specific hardware failures that caused the prolonged outage of the client portal. Option C. The precise calculation of direct financial losses incurred from transaction processing failures during the outage. Option D. The estimation of overtime costs for IT staff required to restore the client portal functionality. The correct answer is A. The assessment of non-financial impacts such as reputational damage and loss of customer trust due to service unavailability. Explanation: when conducting a business impact analysis, BIA, as an internal auditor according to ISO 22317/2015, understanding the nuances of impact categories is paramount. The standard emphasizes that impacts are not solely financial. They encompass a broader spectrum of organizational consequences. For instance, a disruption to a critical customer service function might lead to immediate financial losses due to unfulfilled orders. However, the longer-term impacts on customer loyalty, brand reputation, and potential regulatory fines for service-level agreement breaches are equally, if not more, significant. An internal auditor must assess how effectively the BIA process captures these diverse impacts. This involves scrutinizing the methodologies used to identify and quantify non-financial impacts, such as reputational damage, loss of public trust, or the inability to meet legal or regulatory obligations. The auditor verifies that the BIA considers the cascading effects of a disruption across different operational areas and stakeholder groups. For example, a cyber attack on a payroll system, while directly impacting the finance department, could also lead to employee dissatisfaction, legal repercussions for late payments, and a decline in public confidence if sensitive data is compromised. Therefore, a comprehensive BIA, as audited against ISO 22317, 2015, would evaluate the extent to which all these potential impacts, both direct and indirect, tangible and intangible, are identified, analyzed, and prioritized. The focus is on the completeness and accuracy of the impact assessment, ensuring that the organization has a realistic understanding of the consequences of various disruption scenarios. Question 9. An internal auditor is reviewing the business impact analysis documentation for a financial services firm, focusing on the detailed resource requirements identified for resuming critical trading operations within a 2-hour recovery time objective (RTO). The documentation lists specific personnel roles, server infrastructure, trading platform software licenses, and secure network connectivity. However, it lacks a clear distinction between the immediate resources required for the initial 30 minutes of recovery and the additional resources needed to sustain operations for the full 2-hour window, including failover capabilities for the primary network link. Which of the following best describes a critical deficiency in the documented resource requirements from an ISO 22317, 2015 perspective? Option A. The listing of trading platform software licenses without specifying the exact version or patch level, creating ambiguity regarding compatibility with the recovery environment. Option B. Failure to explicitly differentiate between the minimum essential resources for immediate resumption and supplementary resources needed to meet the full recovery time objective, thereby potentially underestimating recovery needs for sustained operations. Option C. The inclusion of personnel roles that are not directly involved in the core trading function, indicating an overestimation of human resource requirements for the critical process. Option D. The omission of specific backup generator requirements for the data center, which is a critical component for maintaining IT infrastructure during power outages. Correct answer is B. Failure to explicitly differentiate between the minimum essential resources for immediate resumption and supplementary resources needed to meet the full recovery time objective, thereby potentially underestimating recovery needs for sustained operations. Explanation. The core of documenting resource requirements in a business impact analysis (BIA) under ISO 22317, 2015 lies in identifying and quantifying the essential resources needed to resume critical business function within defined recovery time objectives (RTO). This process involves discerning between immediate, short-term, and longer-term resource needs. For an internal auditor examining this documentation, the focus is on the comprehensiveness and accuracy of these identified requirements. Essential resources typically include personnel with specific skill sets, critical IT systems and infrastructure, necessary equipment, vital supplies, and access to external services or third-party support. The auditor must verify that the documented requirements directly correlate with the criticality of the business processes and the stated RTOs. For instance, if a critical process has an RTO of 4 hours, the documented resource requirements must be sufficient to enable its resumption within that time frame, considering dependencies and potential bottlenecks. Key aspect is ensuring that the documentation specifies the minimum necessary resources, avoiding over-provisioning while still meeting the recovery objectives. This includes identifying alternative or backup resources where primary ones might fail. The auditor's role is to assess if the BIA clearly articulates these resource needs in a way that supports the development of effective business continuity strategies and plans, ensuring that the organization can realistically recover its critical operations. The documentation should distinguish between the resources needed for initial recovery and those required for full operational capacity. Question 10. When conducting an internal audit of a business impact analysis, what is the primary objective of verifying the documentation of interdependencies between business activities and their supporting resources, as per ISO 22317, 2015? Option A. To ensure the BIA accurately maps how the disruption of one element can impact other business activities and the organization's ability to meet its objectives. Option B. To validate that the recovery time objectives (RTO) for all dependent resources are explicitly stated and aligned with the primary activities (RTO). Option C. To confirm that all identified dependencies are supported by formal contractual agreements with third-party providers. Option D. to ascertain that the BIA includes a detailed cost-benefit analysis for mitigating each identified interdependency. The correct answer is A. To ensure the BIA accurately maps how the disruption of one element can impact other business activities and the organization's ability to meet its objectives. Explanation: the internal auditor's role in documenting interdependencies within a business impact analysis, BIA, is crucial for understanding how disruptions to one business function or resource can cascade and affect others. ISO 22317-2015 emphasizes the need for a comprehensive BIA that captures these relationships. When an auditor reviews the BIA documentation, they are looking for evidence that the process has systematically identified and recorded how critical business activities rely on specific inputs, outputs, personnel, technology, facilities, and suppliers. This documentation should clearly illustrate the flow of these dependencies, mapping upstream and downstream impacts. For instance, if the customer order processing activity is identified as critical, the BIA documentation should detail its reliance on the inventory management system, IT resource, sales representatives, personnel, and logistics providers, external supplier. The auditor verifies that the BIA process has not only listed these dependencies, but also assessed the potential impact of their unavailability on the primary activity and, consequently, on the organization's overall objectives. This includes understanding the time criticality of these dependencies. For example, a delay in receiving raw materials from a supplier might have an immediate impact on manufacturing, which in turn affects product delivery to customers. The auditor's objective is to confirm that the BIA provides a clear, traceable, and actionable understanding of these interconnected relationships to support effective business continuity planning. The documentation should be granular enough to allow for scenario testing and to identify potential single points of failure or critical bottlenecks. Question 11. An internal auditor is reviewing the business impact analysis, BIA, process at a multinational logistics firm, Global Freight Solutions, following a disruption that significantly impacted their intercontinental shipping operations. The BIA team utilized a survey-based approach to gather information on critical business functions, their resource requirements, and interdependencies. The auditor needs to assess the adequacy of this data collection method in identifying the full spectrum of operational linkages. Which characteristic of the data collection method would be most indicative of its effectiveness in meeting the requirements of ISO 22317-2015 for a comprehensive BIA? Option A. The method captures the perceived importance of functions without validating their actual impact on the organization's ability to deliver its products or services. Option B. The method systematically uncovers and documents both direct and indirect dependencies between business functions and supporting resources. Option C. The method prioritizes the identification of financial impacts over operational disruption to critical functions. Option D. The method primarily relies on senior management's understanding of critical processes without detailed input from operational staff. The correct answer is B. The method systematically uncovers and documents both direct and indirect dependencies between business functions and supporting resources. Explanation: the question probes the understanding of how an internal auditor, adhering to ISO 22317-2015 principles for business impact analysis, BIA, would assess the effectiveness of a data collection method for identifying critical business functions and their dependencies. ISO 22317 emphasizes a structured approach to BIA, which involves gathering comprehensive information about an organization's operations, including the interdependencies between different functions and the resources they rely upon. When evaluating a BIA process, an auditor looks for evidence that the chosen data collection methods are robust enough to capture the nuances of these relationships. Specifically, the auditor needs to confirm that the method can identify not only direct dependencies, e.g., function a needs system X, but also indirect or cascading dependencies, e.g., function a needs system X, which is supported by infrastructure Y, which is managed by Department Z. A method that relies solely on departmental self-reporting without cross-validation or a mechanism to uncover these deeper connections would be considered less effective. The goal is to ensure that the BIA accurately reflects the operational reality and the potential impact of disruptions, which requires a thorough understanding of all contributing factors. Therefore, the auditor would seek assurance that the data collection process is designed to uncover these intricate relationships, thereby providing a more complete picture for subsequent impact assessments and the development of appropriate business continuity strategies. Question 12. When conducting an internal audit of a business impact analysis process, which of the following accurately describes the primary objective of the business impact analysis itself, distinct from risk assessment activities? Option A. To assess the financial viability of implementing specific business continuity solutions based on projected recovery costs. Option B. Systematically identify and evaluate the potential consequences of disruptions to critical business functions and the resources they depend on. Option C. To enumerate all potential threats and vulnerabilities that could affect business operations, regardless of their impact. Option D. To develop detailed, step-by-step recovery procedures for every identified business process. Correct answer is B. To systematically identify and evaluate the potential consequences of disruption to critical business functions and the resources they depend on. Explanation. The core purpose of a business impact analysis, BIA, is to systematically identify and evaluate the potential effects of disrupting critical business functions. This evaluation focuses on the consequences that would arise if these functions were unable to operate as intended. The analysis aims to quantify these impacts, often in terms of financial loss, reputational damage, legal or regulatory penalties, and operational inefficiencies. It's crucial to distinguish the BIA's objective from that of a risk assessment, which primarily focuses on identifying and analyzing threats and vulnerabilities. While related, the BIA's scope is specifically on the impact of a disruption, not its likelihood or the causes. The identification of dependencies between business activities and the resources required to support them is a key output, informing the development of recovery strategies. Therefore, the fundamental goal is to understand what happens if a disruption occurs, and to what extent, thereby prioritizing recovery efforts based on the severity of these impacts. Question 13. During an internal audit of a business continuity management system, an auditor is reviewing the business impact analysis, BIA, for a critical customer order fulfillment process. The BIA identifies a potential disruption lasting for 72 hours. The auditor needs to ensure the BIA accurately reflects the total financial impact. Which of the following aspects, when thoroughly estimated and included in the BIA, best represent the comprehensive financial consequences of this disruption according to ISO 22317/2015 principles? Option A. The potential decrease in customer satisfaction scores and the long-term reputational damage to the company. Option B. The estimated cost of replacing damaged IT equipment that might be affected by a power surge during the disruption. Option C. The projected salary costs of employees who are unable to perform their duties during the 72-hour downtime. Option D. The sum of projected lost revenue from unfulfilled orders, increased operational costs due to overtime and expedited logistics, and any contractual penalties for late deliveries. Correct answer is D. The sum of projected lost revenue from unfulfilled orders, increased operational costs due to overtime and expedited logistics, and any contractual penalties for late deliveries. Explanation. The core of a business impact analysis, BIA, in relation to financial impact, as per ISO 22317/2015, involves quantifying the potential losses. This includes not only direct revenue loss, but also the escalation of expenses and the imposition of penalties. When assessing a critical business process, such as customer order fulfillment, an internal auditor must consider the various financial repercussions of its disruption. Revenue loss is often the most immediate and visible impact, calculated by estimating the income that would not be generated during the downtime. Increased expenses can manifest in various forms, including overtime pay for staff to catch up, expedited shipping costs to meet delayed orders, or the cost of engaging third-party vendors to temporarily cover the lost capacity. Penalties, particularly relevant in service-level agreements, SLAs, or contractual obligations, represent a direct financial cost incurred due to failure to meet agreed-upon performance standards. For instance, if a disruption prevents the timely delivery of goods, contractual penalties might be levied by the affected clients. An auditor's role is to ensure that the BIA comprehensively captures all these facets of financial impact to provide a realistic picture of the consequences of a disruption, thereby informing appropriate resource allocation for business continuity. The question focuses on the auditor's responsibility to ensure that the BIA includes a thorough estimation of all these financial elements to accurately represent the total potential loss. Question 14. When initiating the internal audit of an organization's business impact analysis (BIA) process, aligned with ISO 22317/2015 principles, what is the most critical foundational step an internal auditor must undertake to ensure the audit's relevance and thoroughness, particularly concerning the identification of compliance gaps against relevant regulatory frameworks such as data privacy legislation? Option A. Developing a detailed checklist of all potential BIA deliverables without prior confirmation of the organization's specific BIA framework or applicable legal mandates. Option B. Conducting preliminary interviews with key stakeholders across all departments to gauge their general understanding of the BIA process and its perceived effectiveness. Option C. Reviewing the organization's most recent financial statements to assess the economic impact of potential disruptions identified in the BIA. Option D. Defining the precise scope of the audit to encompass specific BIA methodologies, critical business functions analyzed, data sources, validation techniques, and the integration of BIA findings with regulatory compliance obligations. Correct answer is D. Defining the precise scope of the audit to encompass specific BIA methodologies, critical business functions analyzed, data sources, validation techniques, and the integration of BIA findings with regulatory compliance obligations. Explanation. The planning phase of an internal audit for a business impact analysis (BIA) process, as guided by ISO 22317/2015, necessitates a structured approach to ensure comprehensive coverage and effectiveness. A key element in this planning is the determination of the audit scope. The scope defines the boundaries of the audit, specifying which parts of the BIA process, related documentation, and involved personnel will be examined. This involves identifying the specific BIA methodologies employed by the organization, the critical business functions and processes that have been subjected to BIA, the data sources and validation methods used, and the integration of BIA outputs into the broader business continuity management (BCM) framework. Furthermore, the audit plan must consider the organization's regulatory and legal obligations that influence its BIA requirements, such as data protection laws, e.g., GDPR if applicable to the organization's operations, or industry-specific compliance mandates. The auditor's responsibility is to ensure the audit plan adequately addresses these elements to provide assurance that the BIA process is effective, compliant, and supports the organization's resilience objectives. Establishing clear audit objectives, defining the criteria against which the BIA process will be evaluated, e.g., ISO 22301 requirements, internal policies, and identifying the resources and timeline are also integral to effective planning. Question 15. An internal auditor reviewing the business impact analysis for a financial services firm identifies a critical customer onboarding process that is heavily reliant on a third-party cloud service provider for data storage and processing. The BIA report highlights a significant risk of service interruption due to potential outages or data breaches at the provider. Considering the principles outlined in ISO 22317/2015 for developing mitigation strategies for dependency risks, which of the following approaches would be the most effective in addressing this identified vulnerability? Option A. Negotiate a service-level agreement with the cloud provider that includes penalties for downtime and a robust disaster recovery plan, while simultaneously identifying and vetting an alternative cloud service provider for potential future migration. Option B. Allocate additional budget to develop an in-house data storage and processing solution that can fully replicate the functionality of the third-party provider. Option C. Implement enhanced cybersecurity training for all employees involved in the customer onboarding process to reduce the risk of human error leading to data compromise. Option D. Establish a more frequent communication protocol with the current cloud service provider to receive early warnings of any potential system issues or planned maintenance. The correct answer is A. Negotiate a service-level agreement with the cloud provider that includes penalties for downtime and a robust disaster recovery plan, while simultaneously identifying and vetting an alternative cloud service provider for potential future migration. Explanation. The question asks about the most effective mitigation strategy for dependency risks identified during a business impact analysis, BIA, under ISO 22317-2015. Dependency risks arise when a critical business activity relies on an external supplier, another internal department, or a specific piece of technology. When these dependencies are disrupted, the critical activity is also impacted. ISO 22317-2015 emphasizes identifying these dependencies and developing appropriate strategies to manage them. Mitigation strategies aim to reduce the likelihood or impact of a disruption. For dependency risks, a key aspect is ensuring alternative sources or robust contingency plans are in place. Establishing secondary supplier agreements or developing internal capabilities to substitute for the external dependency directly addresses the vulnerability. This proactive approach minimizes the potential downtime and impact on critical business functions if the primary dependency fails. Other options, while potentially relevant to broader risk management, are less specific to the direct mitigation of a dependency risk. For instance, enhancing communication might be a supporting activity, but it doesn't directly resolve the reliance on a potentially failing external entity. Increasing resource allocation to unrelated activities does not address the specific dependency. Focusing solely on post-incident recovery, while important, is a reactive measure and not the primary mitigation for a known dependency risk. Therefore, the most effective strategy is to build resilience into the dependency itself through alternatives or internal capacity. Question 16. During an internal audit of a financial services firm's business continuity program, an auditor is examining the resource allocation strategy following a recent business impact analysis. The BIA identified the client transaction processing activity as paramount, with a maximum tolerable downtime MTD of 2 hours and a recovery time objective RTO of 1 hour. Another activity, internal HR records management, was classified as important but less critical, with an MTD of 24 hours and an RTO of 8 hours. The firm has limited specialized IT support staff available for immediate recovery efforts. What is the most appropriate principle the auditor should use to assess whether resources are being allocated effectively for these two activities, ensuring compliance with the spirit of ISO 22317-2015 regarding criticality-driven resource deployment? Option A. Focus resource allocation on the activity with the largest number of dependent business processes, regardless of its specific MTD or RTO, as identified in the BIA. Option B. Allocate IT support staff to internal HR records management first, as its longer MTD suggests a greater overall need for sustained support over a longer period. Option C. Prioritize the allocation of specialized IT support staff to client transaction processing to meet its stringent RTO and MTD, as its impact on revenue and client trust is significantly higher. Option D. Distribute the limited IT support staff evenly between client transaction processing and internal HR records management to ensure both functions receive some level of attention. The correct answer is C. Prioritize the allocation of specialized IT support staff to client transaction processing to meet its stringent RTO and MTD, as its impact on revenue and client trust is significantly higher. Explanation. ISO 22317-2015, in its guidance on business impact analysis, BIA, emphasizes the systematic identification and prioritization of business activities and their dependencies. A crucial aspect of this is the allocation of resources based on the criticality determined during the BIA. Criticality is established by considering factors such as the maximum tolerable downtime (MTD), recovery time objective (RTO), and recovery point objective (RPO) for each business activity. When an internal auditor reviews the resource allocation process following a BIA, they must verify that resources, personnel, technology, facilities, etc., are assigned in a manner that supports the achievement of these defined recovery objectives for the most critical activities first. This involves ensuring that the availability of essential resources directly correlates with the urgency of recovery for high-priority business functions, as stipulated by the BIA findings. For instance, if a BIA identifies a critical customer service function with an MTD of 4 hours and an RTO of 2 hours, the auditor would expect to see that the necessary personnel, communication systems, and operational data are prioritized for immediate restoration and support for this function before less critical activities with longer MTDs are addressed. The auditor's role is to confirm that the BIA's outputs, particularly the criticality ratings and recovery requirements, are demonstrably driving resource deployment decisions, thereby ensuring the organization's resilience and adherence to its stated business continuity objectives. This alignment is fundamental to the effectiveness of the overall business continuity management system. Question 17. When an internal auditor is evaluating an organization's adherence to ISO 22301-2019 for its business continuity management system, and they are specifically examining the integration of the business impact analysis (BIA) process, which aspect of ISO 22317-2015 is most crucial for the auditor to confirm is adequately addressed to ensure the BIA effectively supports the BCMS. Option A. The establishment of a fully automated disaster recovery solution for all non-critical business functions to minimize any potential downtime. Option B. The detailed documentation of all potential business continuity strategies and their associated costs, regardless of their criticality. Option C. The systematic identification and prioritization of critical business activities and their associated dependencies, along with the determination of recovery time objectives, RTO, and recovery point objectives, RPO, based on impact analysis. Option D. The comprehensive review of all legal and regulatory requirements pertaining to the organization's industry, without direct linkage to the impact of disruptions on specific business activities. The correct answer is C. The systematic identification and prioritization of critical business activities and their associated dependencies, along with the determination of recovery time objectives, RTO, and recovery point objectives, RPO, based on impact analysis. Explanation: ISO 22317-2015, the standard for business impact analysis, serves as a foundational element for establishing a robust business continuity management system, BCMS, as outlined in ISO 22301-2019. While ISO 22301 provides the overarching framework for a BCMS, ISO 22317 specifically details the methodology and requirements for conducting a business impact analysis, BIA. The BIA is a critical input to the BCMS, as it identifies critical business functions, assesses their impact over time, and determines the recovery time objectives, RTO, and recovery point objectives, RPO. An internal auditor assessing compliance with ISO 22301 would need to verify that the organization's BIA process, as guided by ISO 22317, effectively supports the BCMS objectives. This includes ensuring that the BIA accurately identifies dependencies between activities, resources, and external parties, and that these findings are used to inform the selection and implementation of appropriate business continuity strategies. The auditor would look for evidence that the BIA process is systematic, documented, and regularly reviewed to maintain its relevance and accuracy, thereby ensuring that the BCMS is based on a sound understanding of the organization's operational vulnerabilities and recovery needs. The output of the BIA directly influences the development of incident response structures, business continuity plans, and the overall resilience of the organization. Question 18. When conducting an internal audit of a business impact analysis, BIA, for a financial services organization, what specific aspect of IT infrastructure dependency assessment requires the most scrutiny to ensure alignment with recovery time objectives, RTO? Option A. The BIA's inclusion of all software licenses and their renewal dates. Option B. The BIA's detailed mapping of individual server roles and their criticality to specific business processes. Option C. The BIA's general statement about the need for reliable internet connectivity. Option D. The BIA's listing of all IT hardware assets owned by the organization. The correct answer is B. The BIA's detailed mapping of individual server roles and their criticality to specific business processes. Explanation. The core of an internal auditor's role in business impact analysis, BIA, is to assess the thoroughness and accuracy of the documented dependencies. ISO 22317, 2015 emphasizes identifying critical activities and the resources required to sustain them. When evaluating a BIA's assessment of IT infrastructure dependencies, an auditor must go beyond merely listing systems. The auditor needs to verify if the BIA has adequately identified the specific components within that infrastructure that are essential for critical activities to operate within their defined recovery time objectives, RTO, and recovery point objectives, RPO. This includes understanding the interdependencies between different IT systems, the underlying network infrastructure, power, cooling, and specialized hardware or software licenses. A comprehensive BIA would detail the criticality of each component and its potential impact if unavailable. For instance, if a critical customer service application relies on a specific database server, the BIA should identify that server as a critical IT dependency, not just the application itself. The auditor's role is to ensure this level of granularity and validation has occurred, confirming that the BIA provides a realistic basis for developing appropriate recovery strategies. This involves cross-referencing the identified IT dependencies with the stated RTOs and RPOs to ensure alignment and feasibility. Question 19. During an internal audit of a financial services firm's business continuity plan, an auditor is reviewing the maximum tolerable period of disruption, MTD, assigned to the core transaction processing system. The system handles sensitive client financial data and is subject to numerous compliance mandates. Considering the interplay of external influences on the MTD, which of the following factors would be the most critical determinant for the auditor to validate when assessing the appropriateness of the assigned MTD? Option A. The perceived importance of the transaction processing system to the firm's overall market reputation. Option B. The internal IT department's estimated cost of maintaining the system's uptime during a prolonged outage. Option C. The number of competing financial institutions that offer similar transaction processing services. Option D. The specific clauses within client service level agreements, SLAs, that outline penalties for transaction processing delays. The correct answer is D. The specific clauses within client service level agreements, SLAs, that outline penalties for transaction processing delays. Explanation. The maximum tolerable period of disruption, MTD, is the longest period an organization can survive without a critical business function being performed. When determining the MTD for a specific business process, an internal auditor must consider a multifaceted array of constraints. Legal and regulatory obligations are paramount, as failure to comply can result in severe penalties, reputational damage, and even operational shutdowns. For instance, data privacy regulations like GDPR or CCPA may dictate specific timeframes for data restoration or notification following an incident, directly influencing the MTD of processes involving personal information. Similarly, contractual agreements with clients, suppliers, or partners often stipulate service-level agreements, SLAs, that define acceptable downtime or recovery times. Non-adherence to these contractual obligations can lead to financial penalties, loss of business, or legal disputes. Furthermore, industry-specific regulations such as those in finance, e.g., Basel Roman III SOX, or healthcare, e.g., HIPAA, impose stringent requirements on the availability and continuity of critical services. An internal auditor's role is to verify that the MTD assigned to a business process accurately reflects the most restrictive of these legal, regulatory, and contractual requirements, ensuring the organization's resilience and compliance. The auditor would assess documented policies, contracts, and relevant legislation to validate the MTD. Question 20. When initiating a business impact analysis, BIA, according to ISO 22317-2015, what foundational step is paramount for ensuring the analysis accurately reflects organizational criticality and regulatory adherence, particularly when considering entities like Veridian Dynamics operating under stringent financial sector regulations? Option A. Conducting a preliminary risk assessment to identify potential threats that could impact business operations before determining the criticality of those operations. Option B. Clearly defining the BIA's scope and objectives, ensuring alignment with relevant regulatory mandates, and securing explicit agreement from key stakeholders regarding the identified critical business functions and their interdependencies. Option C. Establishing a comprehensive communication plan for disseminating BIA findings to all employees, even those not directly involved in critical operations. Option D. Developing detailed recovery strategies for all identified business functions, irrespective of their criticality level, to ensure comprehensive preparedness. The correct answer is B. Clearly defining the BIA scope and objectives, ensuring alignment with relevant regulatory mandates, and securing explicit agreement from key stakeholders regarding the identified critical business functions and their interdependencies. Explanation. The planning and preparation phase of a business impact analysis, BIA, is crucial for its success. A key element in this phase, as guided by ISO 22317, 2015, is the identification and engagement of relevant stakeholders. These stakeholders are individuals or groups who have an interest in, or are affected by, the organization's operations and the outcomes of the BIA. Their input is vital for accurately identifying critical business functions, understanding dependencies, and determining recovery time objectives, RTO, and recovery point objectives, RPO. The scope of the BIA, which defines the boundaries of the analysis, must be clearly established and agreed upon by these key stakeholders. This ensures that the BIA focuses on the most critical aspects of the organization and that the results are relevant and actionable. Without this clear scope and stakeholder buy-in, the BIA may be incomplete, inaccurate, or lack the necessary support for implementation of the resulting business continuity plans. Regulatory requirements, such as those mandated by data protection laws like GDPR or industry-specific regulations, also inform the planning process by highlighting specific functions or data that must be protected and recovered within defined timeframes. Therefore, a comprehensive understanding of these regulatory obligations is a prerequisite for effective BIA planning. Question 21. During an internal audit of a business impact analysis for a financial services firm, an auditor is reviewing the resource requirements identified for the critical foreign exchange trading function. The documented recovery time objective, RTO, for this function is 2 hours. The BIA indicates that a minimum of 5 traders with specialized market data access and 3 IT support staff with expertise in the trading platform are required for resumption. Additionally, the analysis specifies the need for a dedicated trading terminal server with a minimum processing capacity of /500 transactions per second and /1 terabyte of high-speed storage. The auditor notes that the BIA also lists a requirement for a backup generator for the data center, but the analysis does not explicitly quantify the required power output or duration of operation, beyond ensuring the trading platform remains online. What is the primary deficiency in the resource requirements analysis for this critical function from an internal auditor's perspective, considering ISO 22317-2015 principles? Option A. The RTO of 2 hours is too aggressive for a foreign exchange trading function, requiring a re-evaluation of business priorities. Option B. Insufficient quantification of the backup generator's power output and operational duration relative to the RTO for the trading function. Option C. Lack of identification for personnel with specific market data access skills, which is a critical component for the trading function. Option D. The identified IT support staff expertise is too narrowly focused on the trading platform, neglecting broader network infrastructure support. The correct answer is B. Insufficient quantification of the backup generator's power output and operational duration relative to the RTO for the trading function. Explanation. The core of resource requirements analysis in a business impact analysis, BIA, is to identify and quantify the minimum necessary resources to resume critical business functions within their defined recovery time objectives, RTO. This involves understanding not just the type of resource, e.g., personnel, IT systems, facilities, equipment, but also the quantity and availability needed. For personnel, it means determining the number of individuals with specific skill sets, their required working hours, and their availability during a disruption. For IT systems, it involves specifying hardware, software, network bandwidth, and data storage capacity. Facilities require details on physical space, power, cooling, and security. Equipment needs might include specialized machinery or tools. The process of identifying these requirements is iterative and directly informs the development of recovery strategies. It is crucial to distinguish between required resources and desired resources to ensure focus on essential elements for business continuity. An internal auditor's role is to verify that this analysis has been conducted thoroughly, is based on realistic assumptions, and accurately reflects the needs of the critical business function, thereby ensuring the efficacy of subsequent recovery planning. The analysis must also consider dependencies between different resource types. For instance, a critical IT system requires not only the server and network infrastructure, but also the personnel to operate and maintain it, and the facility to house it. Therefore, a comprehensive resource requirements analysis links directly to the RTOs and recovery point objectives, RTO and RPO, established for each business function. Question 22. When conducting an internal audit of a business impact analysis, BIA, for an organization that processes sensitive financial data, what is the most critical aspect of evaluating the identification of dependencies and interdependencies to ensure the accuracy of the resulting recovery strategies? Option A. The BIA's comprehensive review of historical incident reports to identify patterns of past disruptions affecting specific business functions and their related resources. Option B. The BIA's systematic mapping of how each critical business function relies on specific internal systems, external vendors, and other organizational units, including the documented impact of each dependency's failure on the function's ability to operate within its defined recovery time objective. Option C. The BIA's assessment of the organization's overall financial health and its capacity to invest in redundant infrastructure for all identified critical business functions. Option D. The BIA's detailed listing of all personnel involved in each critical business function, with specific attention to identifying single points of failure within staffing structures. Correct answer is B. The BIA's systematic mapping of how each critical business function relies on specific internal systems, external vendors, and other organizational units, including the documented impact of each dependency's failure on the function's ability to operate within its defined recovery time objective. Explanation. The core of a business impact analysis, BIA, is to understand how disruptions affect an organization's critical business function. Identifying dependencies and interdependencies is crucial for this. Dependencies refer to a function's reliance on specific resources, systems, or other functions. Interdependencies describe the mutual reliance between two or more functions. For an internal auditor examining a BIA process, the primary objective is to ensure the BIA accurately reflects these relationships to inform effective business continuity planning. When assessing a BIA's thoroughness in identifying dependencies, an auditor looks for evidence that the process systematically maps out what each critical business function needs to operate and what other functions or external entities it relies upon. This includes not only direct dependencies, e.g., function A needs system X, but also indirect or cascading dependencies, e.g., function A relies on function B, which in turn relies on system Y. A robust BIA will detail these relationships, specifying the nature of the reliance, the criticality of the dependency, and the potential impact if the dependency is disrupted. For instance, if a customer service function relies on a CRM system, and that CRM system relies on a specific database server, the BIA must capture this chain. The auditor's role is to verify that the BIA has documented these linkages comprehensively, ensuring that the recovery strategies developed are based on a complete understanding of operational requirements and potential failure points. This systematic mapping allows for more accurate determination of recovery time objectives, RTO, and recovery point objectives, RPO, for each function. Question 23. When an internal auditor is evaluating the thoroughness of a business impact analysis, BIA, conducted by a manufacturing firm, what specific aspect of the analysis directly informs the establishment of recovery time objectives, RTO, for its critical production lines, reflecting the absolute latest point at which a disruption can be tolerated before severe, irreversible damage occurs? Option A. Maximum tolerable period of disruption, MTPD. Option B. Recovery Point Objective RPO. Option C, Resource Dependency Assessment. Option D, Business Process Interdependency Mapping. Correct answer is A, Maximum Tolerable Period of Disruption, MTPD. Explanation. The core of a business impact analysis, BIA, is to identify and prioritize business activities based on their impact over time. When an internal auditor assesses a BIA, they are looking for evidence that the organization has systematically determined the maximum tolerable period of disruption, MTPD, for critical business functions. This MTPD is a crucial input for determining recovery time objectives, RTO. The MTPD represents the longest duration a business activity can be unavailable before unacceptable consequences arise. These consequences can include financial loss, reputational damage, regulatory noncompliance, or even existential threats. The auditor would verify that the MTPD is not an arbitrary figure, but is derived from an understanding of the escalating impacts of disruption. For example, if a financial transaction processing system is down, the impact might be negligible for the first hour, but after 24 hours, it could lead to significant penalties and loss of customer trust. Therefore, the MTPD is the point at which these unacceptable consequences are triggered. The process of identifying the MTPD involves engaging with business process owners to understand the interdependencies of activities and the escalating nature of consequences. The auditor's role is to ensure this process is robust, documented, and consistently applied across all critical business functions, forming a foundational element for the subsequent development of recovery strategies and business continuity plans, as outlined in standards like ISO 22301. Question 24. During an internal audit of a business impact analysis for a financial services firm, an auditor is reviewing the determination of the maximum tolerable downtime, MTD, for the critical customer order processing system. The BIA indicates that extended downtime could lead to significant financial penalties due to breaches of data protection regulations like GDPR, reputational damage from customer dissatisfaction, and potential contravention of payment processing standards such as PCI DSS. Which of the following best reflects the fundamental basis for establishing the MTD for this critical business function? Option A, the average duration of past outages experienced by similar systems within the financial sector, adjusted for the organization's specific market position. Option B, the point at which the cost of maintaining system availability exceeds the perceived benefit of processing customer orders. Option C, the earliest point at which the cumulative negative impacts, including financial, reputational, and regulatory noncompliance, exceed the organization's predefined tolerance for disruption. Option D, the time it takes for the IT department to restore the system to full operational capacity, as outlined in the disaster recovery plan. The correct answer is C, the earliest point at which the cumulative negative impacts, including financial, reputational, and regulatory noncompliance, exceed the organization's predefined tolerance for disruption. Explanation. The maximum tolerable downtime, MTD, for a critical business function represents the longest period a function can remain unavailable without causing an unacceptable level of impact. This impact is typically measured against predefined organizational objectives, legal or regulatory obligations, and contractual commitments. For an internal auditor reviewing a business impact analysis, BIA, conducted in accordance with ISO 22317, 2015, the primary focus when evaluating the MTD determination for a critical function like the customer order processing system is to ensure it aligns with the overall acceptable level of disruption. This involves verifying that the MTD is derived from a comprehensive understanding of the consequences of prolonged unavailability. These consequences include financial losses, reputational damage, and potential noncompliance with regulations such as GDPR, General Data Protection Regulation, regarding data processing and availability, or industry-specific regulations like PCI DSS, Payment Card Industry Data Security Standard, for financial transactions. The MTD is not an arbitrary figure. It is a direct output of the impact assessment phase of the BIA, where the financial, operational, and reputational impacts are quantified or qualitatively described over time. Therefore, the auditor must confirm that the MTD established for the order processing system is directly traceable to the identified impacts and the organization's tolerance for those impacts, ensuring that the recovery time objective RTO derived from it is achievable and appropriate. The MTD for the customer order processing system is determined by the cumulative negative effects that would arise from its prolonged unavailability, considering the organization's risk appetite and legal obligations. Question 25. When performing an internal audit of a business impact analysis for a critical customer onboarding function at a global technology firm, what specific aspect of the documented business process mapping would an auditor most critically evaluate to ensure the BIA accurately reflects potential disruption impacts and recovery time objectives? Option A. The detailed enumeration of all potential cyber threats that could affect the onboarding process, without specific linkage to process dependencies. Option B. The inclusion of all non-critical support functions and their estimated resource requirements, regardless of their direct impact on the primary onboarding workflow. Option C. The historical performance metrics of the onboarding team over the past 5 years, presented without context to process interdependencies. Option D. The explicit depiction of sequential dependencies and the flow of critical inputs between upstream and downstream processes that directly influence the onboarding timeline. The correct answer is D. The explicit depiction of sequential dependencies and the flow of critical inputs between upstream and downstream processes that directly influence the onboarding timeline. Explanation. The process of mapping business processes for a business impact analysis, BIA, under ISO 22317, 2015 requires an internal auditor to focus on identifying critical interdependencies and the cascading effects of disruptions. When an auditor reviews the documented process map for the customer onboarding function at a financial services firm, they must assess its completeness in reflecting these dependencies. The auditor's objective is to verify that the BIA accurately captures how delays or failures in upstream processes, such as identity verification or credit checks, directly impact the ability to onboard new clients within their defined recovery time objectives. RTO. A thorough process map for BIA purposes would explicitly illustrate these linkages, showing that the output of one process serves as the input for another, and that the disruption of an input process will halt the downstream critical activity. Without this explicit representation of sequential dependencies and their potential impact on the critical function's timeliness, the BIA's effectiveness in determining appropriate recovery strategies is compromised. Therefore, the auditor's primary concern is the clarity and accuracy of these interdependencies within the process mapping, ensuring that the BIA can realistically assess the impact of a disruption on the overall business operation and its ability to meet RTOs. The focus is on the structural relationships and the flow of critical information or activities, not merely the sequence of steps. Question 26. An internal auditor is reviewing the business impact analysis, BIA, process at a financial services firm, Global Trust Bank, which operates under strict regulatory requirements from the Financial Conduct Authority, FCA. The auditor's objective is to assess the BIA's alignment with ISO 22317-2015 and its effectiveness in identifying critical business functions and their recovery needs. Considering the firm's reliance on complex interdependencies between its trading platforms, customer service portals, and regulatory reporting systems, which of the following best describes the primary focus for the internal auditor when evaluating the scope and completeness of Global Trust Bank's BIA? Option A. Confirming that the BIA report includes a comprehensive list of all IT assets and infrastructure supporting the business functions, irrespective of their criticality, to ensure a complete inventory for disaster recovery planning. Option B. Verifying that the BIA methodology adequately identifies and quantifies the maximum tolerable period of disruption for all critical business functions, considering their interdependencies and potential cascading effects, and that these are documented to inform RTO and RPO setting in compliance with regulatory expectations. Option C. Validating that the BIA exclusively focuses on financial losses incurred during a disruption, as this is the primary concern for regulatory bodies like the FCA, and that other impact categories are deemed secondary. Option D. Ensuring that the BIA process has captured feedback from all employees across every department, regardless of their role in critical business functions, to gauge general awareness of business continuity principles. The correct answer is B. Verifying that the BIA methodology adequately identifies and quantifies the maximum tolerable period of disruption for all critical business functions, considering their interdependencies and potential cascading effects, and that these are documented to inform RTO and RPO setting in compliance with regulatory expectations. Explanation: the purpose of ISO 22317, 2015 is to provide guidance on conducting a business impact analysis, BIA, to support the development of a business continuity management system, BCMS. An internal auditor's role is to assess the effectiveness and compliance of the BIA process against the requirements of this standard and the organization's own policies. The scope of an internal audit of a BIA, as guided by ISO 22317, should encompass the identification of critical business functions, the assessment of their impacts over time, and the determination of recovery time objectives, RTO, and recovery point objectives, RPO. This includes verifying that the methodology used is appropriate, that data collected is accurate and sufficient, and that the outputs of the BIA are clearly documented and communicated to inform the development of appropriate business continuity strategies. The auditor must ensure that the BIA considers dependencies between activities and resources, as well as the potential consequences of disruption across various categories, such as financial, operational, reputational, and legal/regulatory. A key aspect is confirming that the BIA process is integrated with other relevant organizational processes, like risk management and incident response planning, and that it is subject to periodic review and updates to maintain its relevance and accuracy. The standard emphasizes a structured approach to understanding the consequences of disruptions, which is fundamental to prioritizing recovery efforts and ensuring organizational resilience. Therefore, an internal auditor must confirm that the BIA process systematically addresses these elements to meet the standard's intent. Question 27. Assessment of a business impact analysis, BIA, conducted by an organization to understand the potential consequences of disruptions to its customer service operations, reveals a detailed list of customer-facing activities. However, the analysis lacks clarity on how the failure of the primary customer relationship management, CRM, software directly impacts the availability of essential customer data for the support team and the subsequent ability to resolve customer inquiries within agreed service level agreements, SLAs. Considering the principles of ISO 22317-2015, which aspect of the BIA's contribution to organizational resilience is most underdeveloped in this scenario? Option A. The quantification of financial losses associated with the disruption of customer service. Option B. The thoroughness of dependency mapping between critical business activities and supporting resources. Option C. The identification of key stakeholders involved in the recovery process. Option D. The documentation of historical incident data for trend analysis. The correct answer is B. The thoroughness of dependency mapping between critical business activities and supporting resources. Explanation: the core principle of a business impact analysis, BIA, is to identify and assess the potential effects of disruptions on business operations. This involves understanding the criticality of different business activities and the resources they depend on. The identification of dependencies is a crucial element, as it helps to pinpoint the root causes of potential impacts and inform the development of appropriate recovery strategies. When an internal auditor reviews a BIA, they are not just looking for a list of activities, but for a clear articulation of how those activities are interconnected and how a failure in one area could cascade to others. This requires the auditor to evaluate the thoroughness of the dependency mapping and the logical flow from activity to resource to potential impact. The auditor must ensure that the BIA has moved beyond a simple inventory to a sophisticated analysis of operational resilience. The identification of interdependencies between critical business functions and supporting IT systems, personnel, and third-party providers is paramount. Without this granular understanding of how various components of the organization rely on each other, the BIA would be superficial and fail to adequately inform recovery planning. Therefore, the most significant contribution of a BIA to an organization's resilience strategy lies in its ability to illuminate these intricate relationships and their potential consequences. Question 28. Consider a scenario where an organization's primary customer relationship management (CRM) system experiences a prolonged outage. This system is critical for managing client contracts, processing invoices, and ensuring compliance with data privacy regulations concerning customer information. An internal auditor is reviewing the business impact analysis (BIA) for this disruption. Which of the following best represents the primary legal and regulatory impact that the auditor should focus on identifying and quantifying within the BIA framework, specifically concerning potential noncompliance and associated penalties? Option A. The administrative burden of documenting the incident and the potential for employee morale to decline due to extended working hours to mitigate the disruption. Option B. The potential for fines and legal liabilities arising from breaches of data privacy laws, e.g., GDPR, CCPA, due to unauthorized access or loss of customer data during the outage, and penalties for failing to meet contractual service level agreements, SLAs, with clients that mandate system availability and data integrity. Option C. The increased operational costs associated with emergency IT support and the potential for reputational damage among stakeholders due to negative publicity. Option D. The loss of future revenue streams from new customer acquisition efforts that are halted during the system downtime, and the impact on stock prices if the company is publicly traded. The correct answer is B. The potential for fines and legal liabilities arising from breaches of data privacy laws, e.g., GDPR, CCPA, due to unauthorized access or loss of customer data during the outage, and penalties for failing to meet contractual service level agreements, SLAs, with clients that mandate system availability and data integrity. Explanation. The core of a business impact analysis, BIA, is to understand the potential consequences of disruptions. When assessing legal and regulatory impacts, an internal auditor must consider how a disruption could lead to noncompliance with specific statutes or contractual obligations. For instance, a prolonged outage of a system processing sensitive customer data might violate data protection regulations like GDPR or CCPA, leading to potential fines. Similarly, failure to meet contractual service level agreements, SLAs, with key partners due to a disruption could result in penalties. The auditor's role is to identify these specific legal and regulatory touchpoints and assess the financial and reputational ramifications of noncompliance during a disruption scenario. This involves understanding the relevant legal frameworks applicable to the organization's operations and identifying critical business function whose disruption would trigger these compliance failures. The magnitude of potential fines or penalties is a direct consequence of the severity of the noncompliance and the specific regulations violated. Therefore, the auditor's focus is on linking disruption impacts to specific legal obligations and quantifying the potential financial penalties associated with their breach. Question 29. When initiating the development of a business impact analysis, BIA, plan in accordance with ISO 22317-2015, what fundamental step must be undertaken to ensure the analysis effectively addresses the organization's resilience requirements? Option A. Clearly define the scope, objectives, and criteria for prioritization of business functions. Option B. Design a detailed recovery strategy for each identified business function before completing the impact assessment. Option C. Focus exclusively on identifying the maximum tolerable downtime for non-critical business processes. Option D. Immediately commence data collection from all departmental heads without prior stakeholder consultation. The correct answer is A. Clearly define the scope, objectives, and criteria for prioritization of business functions. Explanation. The development of a business impact analysis, BIA, plan requires a systematic approach to identify and prioritize critical business functions and their dependencies. ISO 22317-2015 emphasizes a structured methodology that begins with defining the scope and objectives of the BIA. This involves clearly articulating what the BIA aims to achieve, such as understanding the impact of disruptions on different business processes and determining recovery time objectives, RTO, and recovery point objectives, RPO. The plan must also detail the methodology for data collection, including the types of information to be gathered, e.g., process dependencies, resource requirements, financial and non-financial impacts, and the methods for eliciting this information from subject matter experts and stakeholders. Crucially, the plan should outline how the collected data will be analyzed to identify critical functions, quantify impacts, and establish interdependencies. Furthermore, it must specify the criteria for prioritizing activities and the approach for validating the findings. The plan also needs to consider the resources required for conducting the BIA, including personnel, tools, and time. Finally, the BIA plan should include a schedule for its execution and a framework for reporting the results, ensuring that the output is actionable and contributes to the development of effective business continuity strategies. The primary goal is to ensure that the BIA process is comprehensive, efficient, and aligned with the organization's overall resilience objectives, adhering to the principles of ISO 22317, 2015 for a robust and reliable outcome. Question 30. When conducting a business impact analysis, BIA, as an internal auditor, focusing on the identification of resources indispensable for the continuous operation of a critical business function, such as processing emergency medical dispatch requests, what is the most comprehensive categorization of resources that must be ascertained to ensure a thorough understanding of dependencies and potential vulnerabilities? Option A. Information technology infrastructure, specialized software applications, critical data sets, and skilled personnel with specific system knowledge. Option B. Legal counsel, public relations consultants, and regulatory compliance documentation. Option C. External marketing materials, customer relationship management software, and general administrative support staff. Option D. Physical office space, general office supplies, and basic communication devices like landline telephones. Correct answer is A. Information technology infrastructure, specialized software applications, critical data sets, and skilled personnel with specific system knowledge. Explanation. The core principle of identifying resources for critical business functions in a business impact analysis, BIA, under ISO 22317-2015, is to pinpoint what is absolutely essential for the function to operate at a minimum acceptable level, even during a disruption. This involves looking beyond immediate operational needs to understand the foundational elements that enable continuity. For a critical function like customer order processing, this would encompass not just the software application itself, but also the underlying infrastructure, servers, networks, the specific data required for transactions, and the personnel with the specialized knowledge to operate and troubleshoot the system. The identification process requires a deep dive into the interdependencies of various components. Simply listing the software is insufficient if the servers are unavailable or if the personnel trained on that specific version are unreachable. Therefore, a comprehensive approach considers all categories of resources that are indispensable for the function's survival and eventual recovery. This aligns with the standard's emphasis on understanding the impact of disruptions over time and identifying the resources needed to mitigate those impacts and restore operations within acceptable timeframes. The objective is to be exhaustive in identifying what enables the function, not just what is directly visible.